Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
We've got to check out the worst performer in the S&P 500, and that would be Super Microcomputer. Shares absolutely cratering after Ernst Young resigned as the auditor, citing concerns about the company's governance and transparency. We got with us Caroline Hyde. She's co-host of Bloomberg Technology on Bloomberg TV, 11 Wall Street time each day. She joins us here in the Bloomberg Businessweek studio. Bailey Lipschultz, also with us. He's Bloomberg News Equities reporter. He joins us from our Chicago bureau. Caroline, I want to start with you because I want to remind everyone, or I want you to remind everyone how we got here today with Super Micro, because it's not the first time that SMCI's accounting practices have been under scrutiny.
No, that was in 2020. In fact, if you look back as to when the last time the shares fell as much as they have today, well, that was back in 2018 when a Businessweek report was out that had seen their motherboards and their servers hacked by the Chinese. They're not unaccustomed to controversy, shall we say. But 2020 was when they actually paid a fine, $17 million penalty to end the investigation of the SEC into concerns about accounting. At that point, it was alleged that they'd been basically seeing their revenue come in faster than actually it had been. Now we fast forward, and now it seems to be that we go back 2 months. In August, we get the Hindenburg report that is citing in particular an ex-employee who worries about accounting again. Hindenburg puts out a short report saying that we're worried about the accounting red flags, they call it. The stock tumbles. Then we get reports of a DOJ investigation into all of this. And now, finally, EY not wanting their name to be associated with these financial reports. I mean, that is the last thing you ever want to hear about an accounting firm involved in a company that you have shares in.
Yeah, pretty stunning culmination of that timeline here. Shares currently down about 32% right now. And Bailey Lipschultz, come on in on the fact that Nate Anderson, of course, of Hindenburg Research, he must be having a pretty good day today.
He must be having a good day, Katie. He's having really a good few years, depending what time frame you want to use, whether you go back to the Nikola fraud that he called out or a number of his other big-time hits. When you look at the report from Hindenburg, really kind of laying out those red flags to Caro's point, but the big thing is that was the day before they delayed their 10K filing, so it has been a flurry of issues for the company, and I know this is a name that Hindenburg and a number of other investors, both on the long and short side, have been keeping a close eye on, again, just given the rapid ascent that we saw over the last few years and what we've seen really play out even back since March when it hit its all-time high.
Bailey, hard to answer a counterfactual here, but Katie and I were kind of talking about this ahead of the interview when we were preparing for this, and the idea that shorts certainly play an important role here, even though they're heavily criticized. Do you think we'd be talking about this, or do you think EY would have resigned today had that Hindenburg report not come out?
I think it's impossible to know, Tim, but when you look at it just chronologically, Hindenburg report comes out the next day. They come back and say, all right, we're going to delay our filings because we need a little bit more time to go through them. Fast forward a month to Caro's point, then you have the reports of the DOJ inquiry and investigation, and now ultimately EY resigning. And you look at the letter that EY wrote. Whether or not Hindenburg kick-started this, I think, can be debated. But if you look at the kind of outlay and how those events have played out, whether it was a short report or whether this would have eventually gotten out, it does seem, at least on the margin, to point towards Nate Anderson's report actually kickstarting what we've seen play out.
Caroline, remind us where SMCI is in the chip ecosystem here, because whenever I talk about these companies, I feel like I need some sort of whiteboard that shows where they play.
You and me both, friend.
NVIDIA is, TSMC. And
well, just think of them as encapsulating NVIDIA. They basically take the NVIDIA chips, they circulate them in metal, and they help install your server into your data center. So ultimately, a lot of companies and clients go to a Supermicro rather than directly to an NVIDIA to get all of their compute sorted out. They're in the same lane as Dell, and that is why we're seeing Dell shoot higher today, because main analysts saying that this is their moment to take market share from the likes of Supermicro. And to Bailey's point, this is why it hit an all-time high earlier this year. This is why we saw the shares at one point up fourfold, because they were integral to this whole AI darling surge. And now, well, we're only up about I think 16% year to date, if you're looking at it. And ultimately, we're starting to see them trying to fight against this narrative. We've got to go and make clear that the company is saying it doesn't expect the issues will lead to a revision in previously issued financials, and they have begun to look for another auditor. But look, the share price tells it all, and if you're looking at certain things, we're down 32%. We're the lowest since January the 18th of 2024, so we basically erased all of this year's gains.
Yeah, big time. And great point on Dell. You take a look at shares right now, up about 7.7%. And Bailey, you think about, of course, this enormous, I'm not going to call it a bubble, but all of this enthusiasm around some of these AI names. Obviously, that's catnip for some of these short sellers. I want to talk a little bit about Lumen, because we're talking about this great year that Nate Anderson is having over at Hindenburg Research. Then you think about Lumen, of course. You had, who was it? It was Kerrisdale who took a short position in Lumen a couple months ago. And Lumen has really defied that. They just signed another partnership today with AWS. The shares have done incredibly over the past couple months. So even if you have some of these big run-ups, I guess it just speaks to how difficult a business short selling is.
Exactly, Katie. But the one thing to keep in mind, and this is kind of the hot debate around short sellers, is we don't know when these activist short sellers actually cover their positions. And we don't know whether they're taking out and betting against the company via put options instead of outright shorting the stock. So it's hard to be able to say whether or not, even with Supermicro in mind, Hindenburg actually maximized their potential return, because for all intents and purposes, they could have covered immediately after, and that would not be disclosed. But to your point, with Lumen, with a company like Symbotic, with all of these other AI flavors, if you will, that have drawn the ire of short sellers, whether they're quiet investors betting against the company or activists who come out with these lengthy reports with a number of allegations, it does speak back to your point, the difficulty for the long-term short sellers to be successful. Because if you go back just a little while ago, you look at a company like Herbalife, that Ackman versus Icon narrative, and how that played out, and you kind of can ascribe that, at least at some level, to a number of these other companies that have drawn the scrutiny of those activists.
Someone's shorting this stock, though. It's 20% of the outside float is currently shorted. So yeah, someone out there is still betting against it heavily.
And they're probably feeling pretty good today. It is a good reminder, though, that who knows, of course, this Hindenburg is still in this stock. But Caroline, when it comes to Supermicro, you know, as you mentioned, this timeline of these sort of accounting questions goes back to at least 2020. What is next for this story? What should we keep an eye on from here? Because, I don't know, you think about the reputational damage that this company is going through right now. It seems like a rocky road ahead.
November 5th, same day as the election.
No.
Is when they're coming out with an updated business report. Okay. So ultimately, it can't be their financials because they're delaying their financials, but they are going to come to the market, to their investors, and give an update on November the 5th. So all eyes on that, all eyes on whether they get another accountant.
Are they trying to bury that news with the election?
Would you dare say such a thing, Katie?
I know.
Let's not forget that this company was added to the S&P 500 this year. Yeah. So, you know, which is a very prestigious thing, and, you know, it gets into
it was index. Delisted previously
on
its old accounting issues. And actually, that is something that is being brought up again by analysts. I think Woo Jin Ho over at Bloomberg Intelligence is saying, look, they need to focus on greater corporate governance. We may require a leadership change. And they're also saying, look, maybe we will start to see an issue of delisting once again.
That's what I'm wondering, if those folks over at S&P are having like second guesses about adding it to the S&P 500.
$19 billion valuation still.
Even after today.
Yeah.
All right, a big thank you to Caroline Hyde and Bailey Lipschultz.
You're listening to Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Businessweek. That's Katie Greifeld in for Carol Massar this afternoon. As we mentioned earlier, a slew of economic data today showed that the economy expanded at a robust pace in the third quarter. Inflation-adjusted GDP increased at a 2.8% annualized rate. A big part of that has to do with small business. The U.S. Chamber of Commerce reminding us that small businesses are responsible for employing close to half of the workers in the U.S., and they represent more than 40% of GDP. Needless to say, super important to our economy. For a temperature check of small business, we welcome back Sharon Miller. She's president and co-head of business banking at Bank of America. She joins us from San Antonio. Always good to check in with you, Sharon. You guys do this report over at Bank of America about small business. You get into the demographic details of how small business owners are feeling, how they're doing, what they see coming up ahead. Looking through the data, seems to me people are pretty optimistic right now.
They are. I mean, they did maintain a very positive outlook. I mean, as we surveyed the clients, 78% told us that they expect their revenue to increase over the next 12 months. So to me, that is a good sign. And, there is a positive sentiment out there.
And Sharon, I also thought it was interesting that, within this positive sentiment, you think about what is still an issue, and topics such as inflation, such as supply chain issues come up. And especially with supply chains, we still talk about inflation all the time, but supply chain issues, it's a good reminder that a lot of small business owners are still struggling with that.
They are. I mean, inflation does remain the number one concern in our survey of small business owners. In fact, 9 in 10 told us that they saw inflation as an issue for their business. You're right, supply chain does pop up there, although it has gone down in the list of concerns, but there are still concerns around supply chain. And I'd also say the political environment, that came in number 2, which makes sense. We're in the middle of an election year, and in fact, next week, we will know the election results. And so from there, we normally see this. I mean, we've been doing this survey over 10 years, and every election cycle, there seems to be, concern. And then post that, regardless of who wins, there's certainty and people seem to move on with their business.
So I mentioned that there's really interesting demographic information in this survey. You guys break it down. You look at Black and Latino business owners, you look at women business owners. How do business owners vary based on their demographic data?
Well, I mean, when we talk about women business owners, for example, I mean, they are implementing expansion strategies at a high rate, with 65% focusing on growing their customer base. When you talk about Hispanic Latino business owners, their confidence in the economy despite labor shortages, they're encouraged to obtain funding. In fact, 94% of Hispanic Latino survey respondents told us that they expect to obtain funding for their business to grow. And so, there's some differences, but certainly there's definitely some optimism out there, especially in Hispanic Latino communities and also Black African American communities.
And there's also optimism in local economies. One of the takeaways that I found interesting was that 66% think their local economy will improve, compared to 60% believing that the national economy will improve. Those numbers are fairly close, 66 to 60%, but still an interesting difference there.
It is. And I think, as you think about smaller businesses, and I heard we led into this segment, just thinking about how important small business is to the U.S. economy. But generally speaking, I mean, small businesses are in our local communities. And so, they're very close to their local communities. I think it's important that we support small businesses. And when you think about, what they have more control over, I do think that we tend to see more optimism in local economies and in their own ability to grow their business than maybe that they think about the national or the worldwide landscape.
And Sharon, put some of these numbers into historical context for us. Like you said, you've been doing this survey for about 10 years now. How do the numbers this year compare to the past several years?
Well, we've seen, I think that the revenue expectations, I mean, business owners in general are, more optimistic. And this year we did find a slight uptick as you think about their plans for hiring. In fact, over half plan to hire over the next 12 months, which is an increase, despite labor shortages, despite finding the right skilled labor. People are still hiring for their business. They are expanding, and those numbers have increased. And so, we have seen an uptick in the optimism of business owners. And I do think that this year's report is really a good sign for the next 12 months to come.
Sharon Miller, President, co-head of business banking at Bank of America, joining us from San Antonio. A lot of optimism coming out of that survey.
A lot of optimism. Yeah, definitely interesting to hear about some of the nitty gritty, especially I really love the point on the local economy versus the national economy.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, full disclosure, people who know me know I ride bikes a lot.
You certainly do.
I'm a big Zwifter, too. Zwift is well known among cyclists as a way to train or compete when it's too cold or rainy to go on your bike outside, or if you want to get a quick workout in. The app connects cyclists riding their bikes inside to real-time races in virtual worlds through a mobile device, a computer, or an Apple TV. Think about it like kind of like gaming with your bike. The company has raised $620 million from backers including KKR, Permira Holdings, Amazon's Alexa Fund, and more, giving it a market value of more than $1 billion. We've got with us Eric Min, the co-founder and CEO of Zwift. He joins us here in the Bloomberg Interactive Brokers studio. Welcome. How are you?
Yeah, good. Thank you for having me.
Good to have you back. A lot has happened since you last joined us on Bloomberg. Katie, I don't know if you saw this. We got to do this virtual ride together.
No,
like
I remember it well. It was pretty cool.
Yeah,
I thought you were going to wear the outfit.
I'm not wearing the kit today.
It's disappointing.
Yeah, we're actually,
you've got your helmet over there.
I got the helmet here.
Pop that on.
Don't need that for Zwift. But there's a lot has happened. There was a round of layoffs earlier this year, a big hardware pivot. But I think you being back as sole CEO of the company is sort of among the biggest news. Give us an update. How's the business going?
The business is doing really well. I mean, it's doing better than we expected. We've had some change earlier this year, and we've pivoted, and really the focus for the business has been really around like what can we do to supercharge our community. I think, which is the most valuable asset that we have. So we are a leaner team, and we're finding that we're moving faster. Of course, we're doing less, but we get to focus on the things that I think will really moving the needle for us. So the business is doing great. We launched new hardware this year. It's surprisingly doing very, very well. Over the next few months is really the height of our season.
I do want to explain to people who might not know what Zwift is. When Eric says new hardware, we're talking about an actual bike that Zwift has released. It's called the Zwift Ride Smart Bike. And typically the way that people use Zwift is they hook up their own bike to what's called a trainer, and one that can be hooked up to a virtual world using Bluetooth or another type of connection. So instead of you're still using a trainer with the smart bike, but what's the idea behind a $1,300 bike?
Yeah, I mean, the price point is an important one. It's probably less than half or a third of what you would typically pay for a smart bike. So I think, innovated on price. We've also developed it, designed it in a way that you can leverage existing hardware that you've already invested in. So what you have is essentially a bike frame that slides onto a trainer that you probably already purchased. The other piece of innovation that we pushed about a year ago is what we call the Zwift Cog. And, for non-cyclists, it's very complicated to understand what kind of gears you need to put on these trainers. We got rid of all that with a single cog. And then what we layered on top of that is a little device that can control and create the gears virtually. And, our goal is to, of course, bring down the cost of the hardware to get onto Zwift, but also just to simplify the onboarding experience. And that is how we open up the market. All our studies have suggested that those are the two drivers for holding us back from growing even more.
Well, let's talk a little bit more about your business. I assume you make money off of a subscription-based sort of membership there. Where are you when it comes to membership? I think the last time you guys spoke, you said around 1 million members. How has that number changed?
We're over 1 million. I think the pandemic did wonders for us. It also it was a double-edged sword because, of course, like many companies, we thought the growth would continue forever. But what we're finding today is that we're growing. We're certainly growing on a number of different levels, both revenue and subscribers. But I think, to double your business like we did during the pandemic is just an unrealistic expectation. So we've adjusted our business to that.
One thing that you've also done within the last year is actually increase prices, I believe since the first time since 2017. Yeah. So for years it cost about $15 a month. Now it's $20 per month. It's not an annual membership. That's a monthly membership. How did members respond? What has churn been like?
Well, I don't think anyone likes price increases. Let's be honest, right? But I think certainly we feel very good about it. The value that we offer to our community at $20 a month and $200 for the year is really good value, given all the other products that are out there and the experiences that we offer. But look, things have gotten more expensive since 2017. We've not raised the prices, and I remember reading from community members saying, hey, you should have just increased prices incrementally. I think, well, we would have actually collected more revenues had we done that, but we felt that the timing was right for us to increase the price, and I think the customers have largely voted with their wallets.
Any more price hikes on the horizon?
Look, things, I would never say that there will never be future price hikes. I think the $5 move on a relative basis is big. If we do have future price hikes, I think we should do it more incrementally, like I see from Netflix almost every year.
Well, I'd love to talk about, what went into that. Like Tim mentioned, first price hike since 2017. What did that decision tree look like? Because you think about everything that's happened since 2017, it's exhausting, and it's been a really strange economic moment.
Well, we delayed our price increase, and we've done this twice before. Every time we've done a price increase, how we feel about it is like, well, we should have done it much earlier. Look, things do get more expensive. Our costs have gone up, and we haven't passed that on to our customers. The product is vastly improved since 2017, so we feel really good about it, and we stand behind it. When we were committed to making that change.
Yeah, that's actually one thing that I haven't talked about. The heads-up display, the worlds. There's been a lot of changes to the gaming environment since I started Zwifting, which was during the pandemic. Personally, I don't see myself. That's the main way I actually ride and get exercise, because I have 2 little kids, and going on a 5-hour bike ride on a Saturday like I used to do.
Your wife isn't into that?
It's just not feasible right now. So Zwift is where I do it. You run a lot, Katie.
I do.
Are you a Strava person?
No.
Okay, that's interesting. She's a Garmin person.
I feel like I killed a line of questioning you were about to go
That's
down.
fine. I'm going to turn this way, and I'll talk to Eric about it. You did. One thing I noticed recently with Strava is an AI sort of integration that they're experimenting with. How are you using AI? You recently launched, for me recently, virtual ride partners, which I find a really helpful thing for me. So this is like a pacer that will kind of go at a specific speed that you can keep up with, and it's really helpful for training and for riding. How are you thinking about AI?
So we already use AI in our engineering development. So that's already been happening. I think in terms of how we can expose these types of technology for consumer-related features, we're absolutely thinking about that, and the 2 obvious places will be the conversational, AI experience that, for example, Strava is doing, and I think that's going to be table stakes for many products. It's not going to be something, so innovative. We have to offer it. And I think the other opportunity for us and others is just using machine learning to figure out exactly what to offer in terms of content and when and with whom. That, I think, is the next innovation.
That's more like an Instagram timeline approach, where it serves you what you think you want.
Yes. And I think, it can factor into, your usage behavior, who your friends are, when, what kind of events you like, what kind of fitness you have today, and we can serve up the right content at the right time. I think that is innovation that no one has really produced yet, but that's an exciting opportunity for us.
What about AI and coaching? I ask because I think about myself. My world revolves around me, and the thing that I miss about college is having a coach. And I was part of a running club, but it was just too much. So I'm sort of like making up my own training plans. I could see a lot of value in having an AI coach be able to see your stats, see what you're doing, and suggest workouts.
Let's face it, if you can afford it, you'd rather have a human coach.
Right.
Because they will motivate you more than any tool that you have in front of you. But I think the 2 pieces that I just mentioned to you, which is like a conversation about how you did with your workout, and then the AI to tell you exactly what you should recommend next. Those 2 pieces should, in theory, represent a replacement for an expensive coach. And that, I think, is a solution for, the 95% of the customer base. The 5% should and we'll continue to invest in human coaches.
$200 to $250, $300 a month and
or more,
up, by the way, and up for a coach. Yeah,
I can't.
For a coach that you've never met and just like puts workouts in Zwift and training.
Also, I mean, I'm not going to the Olympics.
You did go to the Olympics, though.
I did.
I
didn't compete at the Olympics. I'm devastated to say. It feels like a steep bill for my ambitions.
Eric, I'm wondering about competition here because you guys were pretty much the only game in town for a while, with what you did at least. Copy Trainer was around before, but just this week, Training Peaks bought IndieVelo, and now they have Training Peaks Virtual. I remember before I joined Strava, I used Training Peaks, and I quit Training Peaks during the pandemic to go to Zwift, excuse me, not Strava. How are you thinking about competition right now?
Well, we have a lot of competition. It's not surprising, and we've had it all along. I think the Training Peaks and IndieVelo makes absolute sense for Training Peaks. I mean, we are partners with many different training platforms that are out there. We launched something called the Training API, and we've onboarded multiple training apps. So we'll continue to be a platform where coaches and these coaching apps can push activities and activities on where you can actually do the event on Zwift. So that won't change. It'll be really, and I don't know the strategy behind Training Peaks and what they'll do with IndieVelo, but it doesn't really change what we need to focus on. And our focus is really to do everything to continue to add value and features for our community. That's really the important asset that we have.
Let's talk a little bit more about the future. This is something I love to ask private companies. Are you thinking about IPOing? Would you be open to either acquiring a business or being acquired? What are you thinking about along those lines?
I think we should always look at opportunities to acquire, merge. Those are opportunities we should be looking at all the time. In terms of what is our end goal in terms of like a liquidity event, I think that just will take some time, but I think we all have aspirations of being a publicly listed company. Whether that happens, in 3 years or 5 years, I don't know. Whether we do that alone or we do it with others, these are all, I think, things time will only tell and how that unfolds. But absolutely, our board, my co-founders, my management team, and investors have big aspirations for this business, so that hasn't changed. It's just timing is everything, right?
I mentioned that you raised more than $600 million since inception. Last time you and I spoke, you said you didn't need to raise money in the near future.
Yeah.
How's the cash balance looking right now?
We're very fortunate. We didn't spend all that capital, so we have a pretty strong balance sheet. I don't think we need to raise any more capital. That's helpful, and that gives us
ever.
I just don't. Yeah, ever, which is great. It gives us a lot of optionality. But look, having just a lot of cash doesn't help either. We need to deploy it smartly, and we need to think of how we can leverage that to build the business.
Last question: how do you the cycling business? There's a ceiling there. There are only so many people who want to be riding bikes in their basement. How do you get people like Katie?
Well, first, you have to get rid of the basement or the garage thing.
Yeah.
And that's why we launched the ride. It's beautiful.
It's my basement,
it's in white. We deliberately picked white instead of black because in our testing, it resonated really well with women.
That's interesting.
Yeah. And I think, we're not just going after cyclists. We're going after people who want to exercise and who want to get fit. And cycling, just the indoor bike and cycling in general, happens to be just a great activity. You can do it for a long time. It's low impact, and you have access with your hands, and you can get engaged with an experience like Zwift. So it's not just for cyclists. We hope that the bike really opens up the addressable market for us.
Eric Min, always good to see you.
Yeah, thanks you for
having me. Thanks for stopping by when you were in New York. Really appreciate it. Eric Min is the co-founder and CEO of Zwift. He joins us here in the Bloomberg Interactive Brokers studio. All right, well, one person who didn't expect to be talking to the CEO of Zwift when she came on our program today is Amanda Rebello. She's head of Xtrackers Sales over at US Onshore, is over at DWS Group. She normally focuses on China, but I found out from Eric that you're actually a Zwifter too?
I'm going to convert Katie.
Oh, yeah?
Yeah.
Maybe sometime.
It's for women as well. It's fantastic. And I definitely had some really wonderful experiences during the pandemic. I was already into cycling. It helped me train for a ride from London to Paris when I was short on time. So, yeah, I am all for it.
That is so cool.
You never know who you're going to meet in the green room
You never know.
At Bloomberg Businessweek.
Of the Interactive Broker Studio. You never know.
You never know. Amanda, let's talk a little bit about what's going on in China. You were on with us, or I should say with Carol and Barry at Future Proof back in September. And a lot has changed in terms of how investors are thinking about China, how the Chinese government is using stimulus money or not using stimulus money to stimulate different parts of the economy. What's your view on investing in China right now?
Yeah, it's incredible the tailwinds that we've seen in China over the past couple of weeks. So we've actually been very fortunate to see $1.6 billion worth of AUM go into our Asher ETF. It's kind of a price discovery tool in the market for lack of like a decent future, basically. But what's interesting is that we haven't just seen fast money go into the ETF. Really, it's down to the fact that, I think earlier on in the year, we did see some of the wirehouses, for example, maybe neutralize their bullish tone on China. The Chinese government has been very aware and has continued, over the past decade with things like the Connect program to, while it doesn't really need foreign investment, to try and stimulate that a little bit more. And so in light of the fact that there have been like outflows internationally from Chinese equities, very aware of maybe some of the cynicisms that there have been amongst Western investors in China. We all know that the GDP growth rate had beforehand been 6.5%. That was reduced down to 5%, and there were some concerns about whether the 5% was achievable. So these stimulus measures are very much about confirming to the market that that is feasible. That started off about 3 weeks ago at the, prior to the Golden Week, where we had cuts on the reserve requirement ratio and then also the 7-day repo rate as well. And so what that did was that freed up about 1 trillion yuan of bank capital. What's been really interesting is that that's not just been about corporate lending, for example, or, commercial real estate lending. It's also trickled down to the retail market. And so what you've seen then is that mortgage rates ended up being cut typically by around 50 basis points or so. And that had freed up about 150 billion yuan for the retail investor to ultimately spend. So,
well, let's talk a little bit about China in the context of the U.S. election.
Yes.
Just 6 days away.
The countdown is on.
I know. I've been counting down since like 47 days.
For some reason, this week just seems really long.
It does.
I don't know if it feels
it's
that way.
only Wednesday.
It does.
That's what I told Katie. She said it felt like Friday.
God, it does feel like a long week. Next week is going to feel long as well. And you think about, of course, these two parties, it's pretty, across the aisle, this sort of hawkish tone on China. And from the perspective of the Western investor coming into the Chinese market, I wonder how that factors in.
Yeah, it's super interesting because, especially always in these weeks in the run-up to election, you start to see these kind of dichotomized views, basically. And what's been really interesting about China, you would think, if we were speaking 6 months ago, that, being long China might be a more pro-Harris kind of stance, and then, being short China would be more a pro-Trump stance. But in reality, actually, we've not seen too much wavering in terms of those flows that we've been seeing, which is surprising. Touch wood, that continues over the next few days. But I think that even, Trump came out with this comment about, that she respects him because he knows he's crazy, kind of, right? So either way, it was like a positive tone, really, on China.
His words, not yours.
Yes.
Yeah. So I was thinking about this recently because Elon Musk has turned into this figure in the Republican Party, especially over the last few weeks, giving so much money to the super PAC, doing the sweepstakes in Pennsylvania. And he has a unique relationship with China because of Tesla's operations in China.
Yeah.
And I find that sort of adding to the story of him and Trump being kind of strange bedfellows because Elon has to stay on China's good side.
Yeah.
And I'm wondering if having him as a voice close to the former president and perhaps future president might be a bullish sign for China?
I think that what Musk kind of understands is that, in the past year, basically, we've seen like sanctions, not just from the US, but also from Europe as well, in terms of Chinese goods. And so Musk likely understands that if China is antagonized, there could be like further sanctions on like selling US EVs into China, which is still a big market, right? We talk about declining population, but it's still over 1 billion, right? It's still 3 times bigger than the US. That's still a lot of consumers that, are a target market. I think then it's perhaps to placate this a little bit. We do have like some conversations with clients about thinking about DMX China. We've been speaking a lot about EMX China. And so we are very aware of the fact that a lot of US equity names, a lot of developed market global equity names have this intrinsic link to revenues from China, to supply chains from China, which Musk is reliant on. And so if you do have this very strong view, Tim, of like, what if the pipe gets cut, right? Yeah. Then CRTC is probably our best solution for that.
When it comes to investing in China, though, I think about 2022. And the narrative there was that you were going to have this fantastic reopening in China. It was going to lift their markets, their risk assets. It did not turn out that way. You take a look at what the CSI 300 did in 2022, down nearly 28%, down another 14% in 2023. And when it comes to investors, do they feel burned by that experience? Do they feel shy about that experience? Because you just saw massive inflows into Chinese ETFs that year, and then it took a long time to see the flows start coming in this current episode of optimism.
Yeah, that's absolutely a fair comment. We did see short positions earlier on in the year, but what's been fantastic to see is that actually the CSI 300 year to date is up 15%, and actually from the lows of February, it's up 30%. So we do see that the market is having conviction in the Chinese economy again, at least bringing it back to a neutral position rather than an overweight position.
And just quickly here, we don't have much time left, but I do want to broaden out. I do want to talk a little bit about the bond market, because I'm taking a look at your notes. You make the case for high yield bonds. What is the case for high yield bonds?
Yeah, so we know that the FOMC is meeting next week. We will have an anticipation of what's going to happen and the direction of travel. 5%, that kind of 5 handle became like, the norm for us for a little while, right? In terms of yield in portfolios, just from having a cash allocation. And so clearly that's not, reliable anymore. And so what we see with investors on the insurance side, on the pension fund side in particular, where there's liability management to consider, but also within retail, searching for income, is moving down the credit spectrum. And we do actually think that high quality, high yield makes sense, just in light of the fact that you've basically seen a halving of default rates over the last 18 months.
High quality, high yield. It's not an oxymoron, Tim.
Okay, I'll take it.
There you go.
Amanda Rebello, thanks for stopping by.
Thank you for having me.
Good to see you. Amanda's head of Xtrackers Sales, U.S. Onshore, over at DWS Group. She joins us here in the Bloomberg Interactive Brokers studio.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.